On October 17, NVIDIA unveiled the first Blackwell wafer manufactured at a U.S. domestic chip factory, signaling imminent domestic mass production of Blackwell AI chips in America. This wafer was produced at TSMC's first large-scale chip manufacturing facility in Phoenix, Arizona, a long-standing manufacturing partner of NVIDIA and widely regarded as the king of chip foundries. This development comes amid a surge in global demand for AI computing infrastructure dominated by NVIDIA's AI GPU clusters. The first Blackwell wafers produced at TSMC's Phoenix facility represent a milestone achievement for President Trump's ambition to bring semiconductor manufacturing back to the United States. In recent years, global tech giants including Microsoft, Amazon, Google, and Meta, Facebook's parent company, have been racing to meet the massive demand for AI computing resources across broader industries. Consequently, they have continuously invested heavily in acquiring AI computing infrastructure, including AI GPU and AI ASIC computing clusters. This AI spending war has intensified. Simultaneously, these tech giants and leading AI application companies like OpenAI are developing general AI technologies capable of matching or even surpassing human intelligence. Led by the stock performance of major tech companies and AI computing supply chain leaders like NVIDIA, Meta, Google, Oracle, TSMC, and Broadcom, an unprecedented AI investment boom has swept across U.S. and global stock markets this year, driving gains in the S&P 500 and global benchmark indices. The MSCI World Index has surged significantly since April and has recently hit new all-time highs. As the earnings season unfolds, the latest results from TSMC and ASML have exceeded expectations, further solidifying global markets' anticipation of a long-term AI bull market and reinforcing tech investors' AI investment faith. This signals that the current super bull market within the global AI computing power supply chain, dominated by NVIDIA, TSMC, Broadcom, and Micron Technology, is far from over. This supply chain will remain the most favored investment sector for global capital in the foreseeable future. Since the start of this year, NVIDIA's stock price has repeatedly hit record highs, surging 40% year-to-date with a current market capitalization of approximately $4.45 trillion. Most Wall Street analysts view NVIDIA as the core beneficiary of the trillion-dollar AI spending wave, projecting its market cap could reach $5 trillion. TSMC's stock price has also hit multiple record highs this year, surging over 50%, even outperforming NVIDIA. Leveraging decades of technological accumulation in chip manufacturing and its long-standing position at the forefront of process refinement and innovation, TSMC consistently commands the majority of global foundry orders. This dominance stems from its world-leading advanced process and packaging technologies, coupled with exceptionally high yield rates, particularly for 5 nanometers and below cutting-edge process chips. NVIDIA's collaboration with TSMC to manufacture chips domestically in the U.S. aims to respond to the call for bringing chip manufacturing back to America. In a recently published blog post, NVIDIA stated that this move will significantly strengthen the U.S. chip supply chain and bring the AI technology stack, including both hardware and software systems that transform data into intelligence, back to the U.S., thereby securing America's absolute leadership in the global AI era. NVIDIA and TSMC's initiative to build U.S.-based AI chips aligns perfectly with U.S. President Donald Trump's policies to strengthen American technological and manufacturing leadership, as well as his long-advocated vision of bringing chip manufacturing back to the U.S. Their joint expansion of chip production capacity in the U.S. also represents a significant response to the Trump administration's tariff exemptions for semiconductor products. Without this domestic capacity expansion, chips and broader consumer electronics may not sustain long-term tariff exemptions. Advancing chip manufacturing reshoring has been a manufacturing goal Trump vigorously pursued since his first term in 2016, viewing this high-end manufacturing reshoring process as a key political achievement. According to statistics from the Semiconductor Industry Association (SIA), the U.S.'s share of global semiconductor manufacturing capacity has declined from 37% in 1990 to 12% in 2020. Consequently, both Biden and Trump have prioritized bringing chip manufacturing back to the U.S. as a key objective during their respective administrations. NVIDIA stated that TSMC's chip manufacturing facility in Arizona plans to fully produce advanced process chips, including 2 nanometers, 3 nanometers, and 4 nanometers, by 2028, alongside cutting-edge A16 chips and other human-made chips utilizing the most advanced sub-2 nm processes. These advanced chips manufactured by TSMC are crucial for frontier technologies such as artificial intelligence, communications, and high-performance computing. TSMC announced in March this year that it would expand its U.S. plans to include 3 large chip manufacturing plants plus 2 advanced packaging facilities plus 1 advanced chip R&D center, while increasing its total U.S. investment to $165 billion. This March statement also signaled that 2.5D and 3D advanced packaging capacities like CoWoS, SoIC, and Info would debut in the U.S., helping establish a more complete AI chip closed-loop ecosystem in the country. As the world's largest advanced process chip manufacturer, TSMC released record-breaking overall performance data last Thursday and unexpectedly raised its outlook beyond market expectations. This has further boosted global investors' optimism regarding expansion tied to AI infrastructure spending. TSMC management also increased the lower bound of this year's capital expenditure target, highlighting the capacity expansion demands driven by sustained robust growth in AI chip demand. The latest results show TSMC's third-quarter net profit hit a historic high, surging 39% beyond expectations. More critically, TSMC raised its 2025 revenue growth forecast to the mid-30% range. Additionally, regarding its CoWoS advanced packaging capacity, critical for NVIDIA's AI GPUs and Broadcom's AI ASICs, TSMC reiterated its focus on significantly boosting production by 2026, indicating that AI-related advanced packaging capacity remains extremely tight. The AI tidal wave is unstoppable, and the strong rally in shares of computing power leaders is far from over. Recently, a series of large-scale AI computing infrastructure deals worth hundreds of billions of dollars have emerged between AI application leaders, including OpenAI, and U.S. chip giants such as NVIDIA, AMD, and Broadcom. These deals aim to accelerate the global construction of hyperscale AI data centers, including the Stargate AI project. While some veteran analysts who experienced the dot-com bubble burst have labeled these massive AI computing orders as circular financing that could further inflate the AI bubble, Goldman Sachs equity analysts argue that despite elevated valuations in the U.S. tech sector, they have not yet reached historic bubble levels. Goldman Sachs notes that the current tech stock rally is primarily driven by fundamental growth in major tech stocks, not irrational speculative fervor fueled by numerous and profitable companies as during the dot-com era. Crucially, leading AI firms like NVIDIA and Google possess exceptionally robust balance sheets, a key departure from previous bubble-era characteristics. Recent surges in global DRAM and NAND high-performance storage prices, coupled with OpenAI, the world's most highly valued AI startup, securing over $1 trillion in AI computing infrastructure deals, and TSMC, the chip foundry king, reporting exceptionally strong beat expectations earnings while raising its 2025 revenue growth forecast to the mid-30% range, collectively reinforce the long-term bull market narrative logic for AI computing infrastructure segments. Liquid cooling systems and core power equipment. The AI computing demand driven by generative AI applications and AI agents at the inference end is vast and boundless, poised to propel the AI computing infrastructure market toward sustained exponential growth. AI inference systems are also what Jensen Huang identifies as NVIDIA's largest future revenue source. Wall Street giants Morgan Stanley, Citigroup, Loop Capital, and Wedbush view the global AI infrastructure investment wave centered on computing hardware as far from over, merely in its infancy. Fueled by an unprecedented AI computing demand storm, this wave could reach $2 trillion to $3 trillion in scale. Top Wall Street institutions like Cantor Fitzgerald, HSBC, and Morgan Stanley see NVIDIA as the primary beneficiary of this trillion-dollar AI spending wave. This explains why Cantor and HSBC recently raised their target prices for NVIDIA significantly. Notably, financial giant HSBC upgraded NVIDIA's stock rating from hold to buy, forcefully countering the AI bubble theory currently circulating in the market. Even more significantly, HSBC has dramatically raised its target price for NVIDIA from $200 to $320, the highest on Wall Street. This new target implies that NVIDIA, currently the world's most valuable company by market capitalization, has a massive upside potential of up to 80%. Should this target be achieved, NVIDIA's market capitalization would approach a staggering $8 trillion. Currently valued at approximately $4.4 trillion, NVIDIA has long held the top spot in global market cap rankings. Its stock price has repeatedly hit new highs this year, surging 40% since the start of 2025,